ESG has become extremely important, and you can only have to look around at the weather events in Australia to really understand that this is climate change in action. We as private debt managers take our ESG responsibilities extremely seriously. And what does that mean? It means that it's embedded in our investment process. We have to actually do a lot of work up front on every one of the deals that we do. So ESG is one of the key filters alongside things like, is this the right industry, the right sector, the right leverage, the right margin, is it the right sponsor, the management team, what's their track record. ESG and their credentials on ESG is also very important. On a private side, we're able to engage directly with management and sponsors to ask them about ESG and to interrogate that with quite a level of detail. Something that you would be able to do if you're simply purchasing bonds in the capital markets. So we do have quite a proactive stance on this, and for environmental, social or governance reasons, should there be any of those issues that could impinge on a sponsor or borrower not being able to meet their interest obligations and pay back our loan, it makes good sense from a business perspective to not proceed with that loan. So we, in effect, are both discharging our responsible investing responsibilities, as well as doing what is really good in terms of our asset class. Because remember, once you're in these deals, they're less liquid and you're not able to trade out of them. So you really need to do all of your homework up front, and ESG is really important that we don't end up on the front page with our clients being associated with things that nobody wants to be associated with from an environmental, social or governance perspective. So really we have in terms of baking the ESG into the process, it really is one of filtering and interrogation in the due diligence phase of every one of these transactions. We will be proactively looking at management and asking them direct questions about what is relevant to their business. Examples are, where are their supply chains? How are they making sure that they're not exploiting child labour? On the asset-backed security side, examples are predatory lending. So if something, if a non-bank lender is actually charging really high rates of interest, that could be considered to be just legal today, but in the future could be considered to be illegal predatory lending. We really don't want to get anywhere close to that, because it's our responsibility not to have people being exploited, but then secondly, it's also good business sense because these people may lose their license to operate.